joined now by Jason Spatafora, better known as the Wolf of Weed Street. Jason, thanks for joining us.
Hey, James, how are you?
We're doing great, thanks. Jason, you're a shareholder of the Green Organic Dutchman, and some of our subscribers have been asking about the long-term prospects for the Green Organic Dutchman, in that, you know, they raised a whole bunch of money and tied up retail shareholders until November this year. Some critics suggest that a lot of that stock's going to come out into the marketplace in November, but supporters say that the company is building and backfilling the value and there's a lot more to come. What do you have to say about that?
I think that anybody that thinks that the market is just going to dump in November is an idiot. I really have no problem saying that. You know, you have to look at this, you know, you got to look at, Canopy is a really good example. So I know people that participated in the PP for Canopy and went 100% and were like, great, I'm crushing it. And they look and, you know, now they can't even look at it. You know, now you're talking about a stock that has gone up, you know, 10,000%. Not that much, but you get it. It's like double unicorn. So yeah, I think that people need to look at kind of the history. I mean, I always trade the history of these stocks, but you know, Canopy and Aurora are really good test, I guess you can say. You know, they paint a pretty interesting roadmap. So you have to consider when Canopy first went public on day one, it lost 42% of its value, went sideways for like 6 months, and then, you know, demonstrated that they had cash in the bank. And the same for Aurora. Once they showed that they had 80 million plus in the bank, that's when those stocks started to react. TGOD is coming out of the gates with a lot more money in the bank, fully funded. You know, probably with the exercise of the $7 warrants and the $1.15 warrants, you're probably looking at somewhere estimated $320 million. That's a hell of a cash position. And there's a reason that companies like Aurora took a big stake, and companies like Eaton Energy, you know, gave their blessing to form this strategic alliance. But to that point, you know, let's look at the Aurora entry, you know. So everybody thinks that, oh, you know, first off, the people in the United States that bought the $1.65 round, they'd be dumb if they sold. So they're dumb because you're talking about short-term capital gains. The that subscription closed on January 1st, so they have to wait till January 2nd to get long-term capital gains. So why, if everybody's selling, are you going to take an extra 20% penalty from the IRS? So that's first. Second, you also have to look at how much Aurora put in and how much they bought. So I think in the last round, they bought something in the neighborhood of 55 million shares. Those 55 million shares are not coming out. Then you have to factor in all the insiders, affiliates, and people that are locked up. You know, CEOs locked up for 42-month escrow, options vest in 36 months. So the supply is a lot less than what people think. And that's usually, you know, when people say that to me, that's usually the first thing I'll tell them. For myself, I don't want to be in the boat of, hey, yeah, I sold this, I made 100% profit. And look, you get in this to make money. I mean, you know, nobody goes broke taking profit. But I also don't want to, you know, see this thing just run, because, you know, they're better positioned than really any cannabis company has ever been out of the gates.
Okay, interesting. Now, I think it's important to disclose here that you're a shareholder in the company, right?
Oh, yeah. Look, I've got a monster position. And my wife was actually really pissed at me because it went public, and I was like, oh, I got 100,000 TGOD. She's like, dollars? And I was like, no, shares. And she's like, why? And I was like, I really didn't think I'd, you know, I'm like, either people aren't getting it or what? I go, but this is a really good value. when you look at funded capacity and comparables to Afria, Aurora, Canopy, then, it was just kind of a no-brainer. But yeah, I've participated in all the rounds, and I disclose my position. If I ever write anything on marijuana stocks, I disclose my position. I think as of today, I've got 126,500 shares that I purchased in the open market. So yeah, I'm a big shareholder, I guess.
You got skin in the game. That's always refreshing to see. Do you think that the cash position of TGOD, and it's obviously going to be has an ability now to execute on all the things that it put in motion, the new grow facility in Valleyfield and everything. Do you think there's any risk whatsoever that the company is, by the time it gets everything up and running, might be looking at a market that's in oversupply in terms of cannabis in the Canadian context?
No, not at all. Okay, and I guess here's why. So you've got how many LPs in Canada? Like 60? Something like that?
No, there's 100 now.
Okay, 100. How many of them are organic?
None. Maybe 2. 3.
Okay, so, with a recreational market, you're going to see, we're going to see this in dispensaries. We're going to see it here. We're going to see it there. You're going to have all of those LPs fighting for, what I call shelf space. The organic market, nobody was set up for it. That's why Aurora came in. They took their position in order to be able to capture at least 20% of TGOD's output. Organic has a 30 to 50% higher margin, depending if you're talking wholesale or retail. And, with respect to medical marijuana and insurance companies and everything like that, if a patient could get their marijuana, they don't want something that's been, had pesticides or herbicides or, anything that could potentially be carcinogenic or whatever. Who knows? They want something clean. And I think insurance companies also look at that and they say, well, we want to mitigate risk. We're already allowing cannabis. We need it to be the safest cannabis out there. So I don't think that hurts TGOD, but I also think that they've also prepared for this and the consolidation in the markets you've heard so much about, which is why they brought on so many guys from Cott beverages, because, if you look at it's like their upside down pyramid, which I'm sure you've seen. Cannabis is at the very bottom. And at the very bottom of that pyramid, you're talking at full capacity, 116,000 kilos, or 130 now if you count Jamaica. You're looking at, almost $1 billion in revenue just from flower. But if you look at the top of the pyramid, it's consumer packaged goods, with respect to beverages, which is why they went so heavy on guys that have already created a multi-billion-dollar company.
Jason, it's Steve Meisner. Pleasure to meet you online today.
Hey, Steve.
I noticed that it came out just recently that the DTC was available for the shares in the U.S. to enhance the exposure, or at least the availability to U.S. investors. How do you see that maybe unfolding for this name and some further Canadian cannabis stocks in general? What do you think how do you see the U.S. appetite at the retail level evolving?
It's very strong. Every company, our clients and everything, I always tell them, especially if it's a new offering, you've got to be DTC eligible. It's you just need it. For whatever reason, it's cleaner and it provides that level of oversight, I guess. People have a better understanding of what they're buying from a capital structure standpoint. But the appetite in the U.S., it just getting bigger and bigger. Every time one of these companies goes to a big board, that money is piling in. And for a long time, the U.S. market was supporting the Canadian market. And now it's kind of flipped to this weird level. But, as for myself, I think I own maybe one company that trades on the OTC. So U.S. investors definitely know, their appetite is really in Canada just because of the regulatory standpoint, and they view, or smart money views, the global blue sky of the industry.
Yeah. Do you think that when the U.S. goes federally legal, that the quality of the publicly traded marijuana company in the U.S. will then go up because a higher quality of investor will be there, and therefore the public company structures will improve, and that will attract more, maybe even more global investment towards the U.S. at that point, as we see more NASDAQ and NYSE listed companies?
I mean, you have to look at it like this. It's going to attract people from both ends of the spectrum, the good ones and the bad ones. It's kind of like cryptocurrency. Everybody's a crypto stock in December. We saw the same thing in January of 2014 once Colorado went legal. But at that point, you are going to see a consolidation in the U.S. market because at that point, you don't need to be this startup. You don't need to be something that's got a lot of convertible debt and just toxic debt. It is going to attract a lot of money, but I think it attracts more money on the private side. And basically, a lot of these OTC companies that have been trying to make it for the last couple of years are just going to get clubbed like a bunch of baby seals.
Okay. Do you see any companies in the U.S. that are what you would call investment quality? And let's not talk about MedMen at this point. We've beaten them up enough, but there are some bigger private enterprises in the U.S. I've become aware of who look like they've got kind of the profile of a big sort of horizontally integrated Canadian LP. They're not public. It doesn't look like they're coming to Canada, though who knows, they can go public here anytime. But it strikes me that there are some really high quality enterprises coming together in the United States that are just waiting for deprohibition at the federal level so that they can breathe a sigh of relief and say, hey, let's just do it and risk being clubbed like a bunch of baby seals.
Well, look, there's good company. I mean, a really good company in the United States is Kush Bottles. They don't touch the plant. It's just an ancillary service. They make bottles and bags and everything for the industry. I think that's a great company. And their revenues just and growth demonstrate that. But to your point, I think that, like the companies that are in the United States that want to get into the Canadian market, they're already getting in the Canadian market. So what I think you see coming out of Canada, especially for some of the public companies, is they're going to have deals with consumer brands in the United States. Call it like Chiba Chews. A Canadian company can't own anything in the United States, but they can license it. So there could be a licensing deal, and then part of that structure is if it goes federally legal, we've got the option to buy, here are the terms. But in the interim, let us help with your global reach, and let's create some of these consumer packaged goods. So if people on Twitter, if I put CPG, that's what I'm talking about. Because at the end of the day, it's not going to be the flower that's going to be valuable. It's going to be these brands that are created. It's going to be the Coca-Colas and the Snickers bars of weed. And companies are already doing that. We just saw in the last week, Aurora take a sizable position in Choom Holdings, which, and full disclosure, Choom is a client of mine, but they get it. Like if you've got a product that has brand awareness and you think that it could do fairly well in not just a Canadian market, but a global market, yeah, people are going to invest in it. So I think the companies that are preparing for that and then planting flags throughout the supply chain are going to be the ones that are, the Amazons and the Starbucks of weed, so to speak.
Right. Okay, so interesting. A couple of our subscribers are asking, they want to know if there are other newer companies that are newer to the market that still have a lot of opportunity in them, like TGOD like Choom that you might know about that possibly aren't being discussed generally at this point?
Ianthus is one in the United States. I'm really just starting to take a look at it, to be perfectly honest with you. It's really tough in the summer. I think that, especially new investors, you need to realize that there's a seasonality to pot stocks. And typically I think that, and I've been pretty vocal about this, that the season is really from October to March 15th. I always see everything just kind of going down. Right now is when you can get those value positions. This is the time when your due diligence really matters. Because, like last summer, I bought Aurora for $1.61, and I was just like, holy shit, $1.61, I couldn't believe it. And people were buying Canopy for $7 and everything. So, I don't really want to single out any one company. I'm pretty vocal about who I like and who I don't like. I think they have to be careful. You don't want to chase hype and everything, because after C45, it's created this kind of shift in that you've got to be a real company. I think you've got to be a licensed producer. Like if you don't have your license, my opinion, which I'm sure a lot of people don't agree with, I just kind of think that you're dead in the water unless you've got some kind of products and, you could kind of float yourself until you get a license. Because like anybody that gets a license now is still a very long time away. And then companies like TGOD supplying the market, we're going to see a consolidation in just price. The reason that TGOD is so attractive is because, they're going to be getting their energy for 75% less than what everybody else is, which is a huge advantage. So coupled with that and then a higher margin, it's kind of a no-brainer. And, I think that's why you're seeing companies like Aurora and Eaton that have come in and formed these partnerships, because at the end of the day, there is going to be this price consolidation, as just, from a flower standpoint. I'm not even talking from a stock standpoint. And the companies that are going to survive are going to be the ones that are the most efficient with their energy, with their capital and everything in between.
Yeah. Okay. Jason, one of our viewers on Facebook is asking, when would you sell Aurora?
I wouldn't. Not now. Okay. It's really easy. Take a look at a 3-year chart. Okay. Or let's start at 2016. Let's go from October 2nd, 2016. And, if you look at it, you'll see, and this goes for Aurora, Canopy, and every dog shit stock out there, they're always hitting their highs in December, January. I mean, it's just a fact of it. I'm not Nostradamus. I just take a look at patterns. I've got a little notebook. I scribble down, hey, this is what it did on this day when the market was closed in Canada. So, I think that you're going to see a lot of new all-time highs in December, January again.
Jason, I wanted to ask about what you think might be the commoditization price band for maybe the raw flower. And I don't know if you have to choose a state just for example purposes, but do you think there will be any sort of flatline pressure for raw flower, or maybe that's already taken place, that makes it maybe more attractive for processors to buy flower?
Are you talking about
to do the value add?
In the United States or Canada?
In the U.S.
Man, the U.S. is crazy. What people are getting just for trimmings is nuts. So yeah, I think California, the price is going down. Vegas, I think the price is being manipulated. Colorado, it's a little bit more of the same. It's all over the place. But from what I understand, and I've got investments in private companies in Nevada, And from what I understand, like the price for trimmings, to create all of these products, the edibles, the gummies, and everything else, is just like through the roof. So it's like this whole sub-market of trimmings, which is, really interesting. But, I really don't, even though that I guess I've got ownership in a grow, I'm mainly focused on the public side because that's the easiest exit. Even on the private side, like the exit's a lot different. So,
you're invested in a actual growing operation in Florida?
No, not Florida.
But
Nevada.
You're based in Florida?
Yeah.
Whereabouts do you live?
Fort Lauderdale.
Fort Lauderdale. Okay, I was close. I said Miami. So tell me about your private investment in a grow up. That's interesting to me because so is it in a state that's already legal, or is it in a state that's coming legal?
No, it's a state that's already recreational. It would be Nevada.
Okay.
And so what happened in Nevada was, so it's crazy because a couple years ago, nobody could get money for investment into Nevada. You were like trying to get all this money in. And then when they had the licensing process, they basically opened it up to everybody. And like every Yahoo and their mom got all these licenses. And the way that the state had it set up was, okay, you had to buy the land, you had to show the building. It's a lot like, the Health Canada process. So what a bunch of guys from New York did was they came in like venture capitalists. And they said, okay, hey, we'll buy the land, we'll build the building. You're responsible for X. You've got to raise this, raise that. And or we're going to end up taking it from you. And so that's exactly what happened in Nevada, essentially.
So if you couldn't actually get into production and get a product out the door, they took away your license?
Yeah, pretty much.
So is Nevada one of the states where there's an excessive supply that's threatening to drive the prices lower and put a bunch of growers out of business?
No, not at all. I think Nevada is the best market in the United States. You're talking about a state with 40 million tourists a year. I think California is just kind of a shit show. I think there's too much. And when people start asking me, they're like, hey, I want to grow in Canada, in California, it's too late.
Mm-hmm. How do you feel about some of the other states that may have been, they're behind the curve? Are there other states that you think are looking attractive on an individual basis, just on a big macro basis?
Yeah, I think Florida will be great, especially if we ever go federally legal. Just because it's kind of the gateway to the islands and South America and everything else. So geographically, it's just in such a great spot. And then going back to the Nevada model, it's got a lot of tourists and a lot of people that just like to smoke weed because they're basically living here and on vacation as it is. I think the state kind of messed up at the beginning because you weren't able to smoke the flower. Now they've just overturned that. And I think that they had to overturn that because, the way that Florida worked is they gave out 7 licenses and they didn't even give them out. You had to bid on it. Actually, we bid on one in Jacksonville and got outbid. So these companies that got licensed, and then all of a sudden you can't smoke them. So yeah, I mean, climate-wise, it's great. I think the only real risk is hurricanes. But yeah, I see it as, there's a lot of, the Port of Miami, in terms of like tech coming in. Let's talk about vape pens and everything. It's an easy choice. Like if I had to pick anywhere where I would have a grow, and then send it around consumer packaged goods and everything, with the ability to ship internationally, I mean, Miami would just be great.
Okay, great.
The incredible irony of of the days from Miami Vice in the 80s when the bales were being dropped in the
Yeah.
Everglades, and now you're suggesting the bales will be going out to the islands in South America. The irony of that is unbelievable.
Yeah.
All right,
Square grouper.
Jason, thank you so much for your participation. We got to leave it there for now. We'll hopefully come back to you as soon as possible. Very insightful. Thank you for your time.
Thank you. Have a good one, guys.
You too.
Thank you.
That was Jason Spatafora. He is better known as the Wolf of Weed Street, and you can find him on Twitter under @WolfOfWeedStreet. If you want to follow or get alerts, rather, there's a few of the comments have suggested that they'd like to know when we're going live. All you need to do is click on the subscribe button on Midas Letter or the little bell that it represents the alert, and you will get a notification every time we go live. Same thing happens on Facebook. You just got to hit the subscribe button. We're going to wrap it up for today. We hope you join us again tomorrow. This has been Steve Meisner and James West for Midas Letter Raw.